In sooth, I know not why I am so sad. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Guten Morgen. Comment allez-vous? Nyama. Welcome to Forex.Today, the YouTube community of more than 18,000 foreign exchange traders. And if you think about it, that's a lot. It's not a very big market, is it? Do you know a lot of Forex traders? Hey, I've been doing this a long time, and it's like maybe once a year I get to hang out with other Forex traders. Wow, it's a small community, but 18,000, that's a blessing. That's really cool. So thank you for being here. Thank you for being part of this community and all of your positive contributions and your positive energy. If you're new here, hey, check the negativity at the door. Simple enough. So, hey, today, let's do some technical and fundamental analysis with the overriding goal of putting together some trade plans. So 3, 2, 1, hit it! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hee da boo boo. So good morning. My name is Wayne McDonald. I am a currency trader just like you. I like technical analysis to confirm or deny hypotheses. Hypotheses being the bias. Cool. So right now the dollar's strong. I get it. I got it. I know it's good. Your trades are tight. But here's the thing. All trends end. Great. So the thing is we use technical analysis to confirm the current trend, confirm the strength of the current trend. You know, speed and momentum is the basics that I've been using for a very long time to do that. And then, of course, align those technical trends with what we believe could be the fundamental currents. So think of it like, you know, there's trade winds and then there's just wind, right? There's currents in the sea, but there are waves. And so we're trying to align all these forces, atmospheric forces with long-term, global forces, if you will. So anyways, whatever, there's the analogy. So ask questions, get involved. I'll do my best to help. So the idea is we should be planning tomorrow. Trades that you're in now, you should have planned yesterday. Very, very, very cool. So we'll leave it at that. I'd like to thank Traders Away for being part of our community as well. You're a trader, they're a broker. It's a symbiotic relationship. So how are they going to lure you into their community? Well, maybe that's my job. Maybe it's the awesome hair. I don't know what's going on here, right? Maybe it's the cool hair. Maybe it's the good education. Maybe it's world-class customer service. Maybe it's fast execution speed. Maybe it's the fact they pay you huge swaps. But the interesting thing is, why don't you start the relationship? Give them an opportunity to earn your loyalty and respect. And you do that by visiting tradersway.com, open up a demo account. Okay? They earn my loyalty and respect right after the crash of the Swiss National Bank debacle. And that was it, because that's more than lip service. That was real. That happened. Some people went out of business because they maybe were not treating their clients as good as they should have. Traders Way, strong, solid. Cool. So look at this. Hey, it's a downtrend, right? So why am I long? Well, I had a little opportunity. That's all. A little opportunity. And it's been a few hours, and I'm still basically break even. And you can see that I got a little thing going here, like maybe, just maybe, okay? Maybe, just maybe, testing the fence, you know? That's all. And then that gets us to there and all that kind of stuff. My other choice, and you know, you've probably been here in the past as well. My choice is to simply not trade at all and just keep waiting. Boy, is that difficult. It's probably the right thing. Okay? But boy, that's difficult, isn't it? Because you don't want to miss it. Okay? So anyways, let me get my marker. So here's the plan. Okay? And of course, we got to breach this resistance. And this is, I would call, more of the primary resistance. Okay? And I think there's going to be a lot of bears selling in the zone. So, you know, whatever. And I think ultimately we need that to happen as well. So like if I was truly a bull on this, I think we're going to get something, you know, bigger. So this is the first touch. And I don't like the first touch. I've trained you over the years. I don't like the first touch. You know, that's sort of a bet. And that's how I feel about this one. I'm in the trade. It's not a bad trade. It's just not a good trade. Now you might say, well, Wayne, why is it a bad trade? Or why is it not a bad trade? Maybe I can do this on a different chart and we can observe from a different point of view. Okay. Let's do it this way. Let's do it maybe like, how should I do this? How about monthly? Okay. Just kind of floating around there. The next one is way down here, 71.5. This is 72.5. Midpoint psych level. That's about it. Makes it a little dangerous, right? Check out weekly. And it's through. Okay. So my thought is, what if it's done here? And you may recall, like, even though this is a weekly M2, it's also next month's monthly M2, only if this is the bottom. So if it creates a bottom like this, that could be advantageous. But whatever, it's not good. So I'll wait. I really am just waiting. Sometimes you're just testing the waters, you know? All right, but speaking about Aussie, that's not really the news, is it? It's what? It's Kiwi. So if you recall, okay, I don't know, a couple of days ago, I guess Monday, also probably last week and the week before, we were talking about how there was a lot of talk. We might have done this in the swing trading group too. There was a lot of talk about the RBNZ, the Reserve Bank of New Zealand, was considering or expected to raise interest rates. Or at least be, you know, sort of the first mover, right? And I think there was a lot kind of built up here over that. Okay? And then what we talked about, was it Monday? I think it was Monday. Today's Wednesday, right? So 2 days ago, we talked about right in here that over the weekend, the government, not the central bank, the central government decided to do another COVID lockdown. Well, that's going to ruin the whole raise interest rates thing, because the economy can't improve if you shut the economy down, right? So this went away Monday. And that's why this collapsed, because there was a lot of people buying. And then the news came out last night. And this is why I'm bringing it up. Right. The news came out last night, and look what happened over here. Okay. Break it down a little bit more. All in 1 hour. Break it down a little more. All in 15 minutes. Break it down a little more. Look at that. All on a 5-minute candle. Interesting, right? I'm not looking to increase volatility in my portfolio. What do I want? I want consistent returns over low volatility. Okay? I want decent returns with low volatility, and what that the number that's spit out of this tells you how much risk you're taking for your reward. We call that risk-adjusted performance. So I don't want the volatility. I don't want to make a lot of money quick. There are strategies for that. That's cool. That's good. Awesome. Love it. But that's not what I'm doing here, right? So again, if you can't predict the future and there's a million variables that can impact the markets, the only way I can handle, or the only way I can get a consistent result is that you behave consistently. So if you trade this volatility in a consistent way over long periods of time, you'll get a normal distribution. Consistency. But in that case, what I'm trying to do is something different. So I pay attention to the release, but I stay out of the volatility. And so 12 hours later, what's happened? Nothing. Right? Okay. Here's where here's the end of yesterday, and here's where we are now. Yeah, it was here. Yeah, it was here. Let me do this in a different color and make sure you can see. Okay. Yeah, it went up there. Yeah, it went down there. But look, we're just basically, if you're trading a day candle, nothing happened. Also, notice this. Bottom of the range. When did we identify this range? Dude, this range I said was the summer range. Right? We did this maybe a month ago. Okay? We have that range, and then, of course, the upper one, which ended up being the play. So we've gone from what I call the full Monty, right? We've gone from the ultimate low to the ultimate high to the ultimate low. Does this mean up from here? No. But what is it that I want to do? Well, I want to short US dollar first, and I understand Kiwi lockdown. Okay? But what all that does is really defer. Okay? If the central bank was thinking about, or was actually going to, and I think that might have been what was going down. They were actually going to raise interest rates, but then over the weekend, the government locked everything down. Well, you can't lock down the country and raise interest rates at the same time. So that's that. So now we got to get through, and the economy's got to open again. And then we need to look at some economic data, and so now they're going to defer it 6 months, basically, maybe longer. But so we'll catch it then, right? Like, don't worry, you'll make money on it next year, right, Cisco? Francisco. That's I think that's Elf. If you guys ever watch Elf. When he goes to work wearing a suit and tie, and he meets Francisco, and he's like, I like that. I like how it makes my tongue feel. Francisco. Francisco. You're like, you know what? He's right. Right? He's right. That's the funniest thing about Will Ferrell. He there's an honesty to his humor. All right. All right. Let's do the commodities. Oil was up. Is it trending? No, it's not trending. But are you listening to my messages? You have to have a bias. Means you're simply know if you're a buyer or a seller. Okay? and then back that up with data. So I said, well, if you're a buyer, then you looked at the International Energy Agency and said, well, look, they predict growth, aka demand, right? Demand, okay, demand. So you can say, I don't know much about nothing, but I know what the IEA says. So I'm a buyer of this. So I look for support. And we said, here, what, Monday or Tuesday? I don't remember, right? Okay, cool. By the way, oil inventory day. Oil inventory, this is a good day to be trading WTI. Okay, I think it comes out, what, 10:30? So anyways, oil's up today, only 1%, but you know what? 1% is 1%. But the thing is, what I was saying about a one touch, this isn't so good, but this is better, right? And then you notice like these big moves here. So technically what this says, at least on this shorter time frame, is this downward move is, found a support. So now a bear wants to take this down. A bull is going to want to drive it up. Cool. There's hope. There's hope for that. If this goes up, you want to buy CAD. Okay. You probably want to buy Norway. Probably want to buy Brent. Keep your eyes on nat gas. Okay. Has anyone here told somebody that you trade the energy complex? Look at that. Beautiful double bottom. This goes all the way back to the first days of August. Here we are, the first days of, August. Okay, cool. Setting this up. Cool. Hey, thank you, Cash. Yeah, no, I know what you meant. Yeah, I'm sort of just indifferent. There's bigger things going on in the world, right? But that's cool. We could take a dip at that. Okay. So anyways, WTI, maybe it's hopeful. Maybe look, bears are going to take it down. But what happens next could be the basis of the next 12 weeks. Do you understand that? This is what we talked about 9 months ago. You're like, Wayne, it was only 7 months ago. Okay. What we talked about 7 months ago is this week could develop into what we do the last 12 weeks. Okay? So if it started doing something like this, it could be a game changer. I'm not saying it will do that, but if it does, it's technically important. Okay? It's like taking your sextant out to the bridge, out onto the bow, pointed to the sky and figure out where you are. What are you trying to figure out? Well, where on earth you are, what direction you're going, right? What speed you're going. There's different things that you want to figure out, but why do you do all of that? Well, you want to catch the trade winds. You want to catch the current. And that's the most important thing. Well, my trade winds, my currents would be global macroeconomics. So I'm using technical analysis to confirm, are we in the right spot to catch the current or the trade winds? Oh, what? Hang on. sextant, an instrument with a graduated arc of 60 degrees and a sighting mechanism used for measuring the angular distances between objects and especially for taking altitudes in navigation. And it looks like this. A sextant is a doubly reflecting navigation instrument that measures the angular distance between two visible objects. The primary use of a sextant is to measure the angle between an astronomical object and the horizon for the purpose of celestial navigation. Yeah, that's what I said. Yeah, that's what I said. Yeah, someone else is like, no, that's what she said. I don't want to get in the tent. All right. Gold. Gold. Everybody loves gold. All right. Great. As you can see, we're in a moment of consolidation. How do you treat that? Well, as a bull, you buy at support, right? So you buy higher lows. But you could also simply buy support. There's two types of support in this world, right? Higher lows and bottom. But the interesting thing about bias is you say, it ain't going up now, but I think it'll go up later. Okay? Now, if we're going to use technical analysis, you're bullish and aggressive here. And these are the rules that I put in my book. Okay? So if you read my book, in this condition, you're bullish and aggressive. You can't even think about shorting. Not even in the cards. It's not even an option. It's not possible, nor is it plausible. Okay? Once again, bullish and aggressive. Okay? Long only. And then this breach right here says you're now bullish and conservative. What does this mean here? Let me do it in blue to just highlight that it's different. Okay? What does this mean? Be prepared for a double top. Ooh. Not that it will, just be prepared. Interesting. But before a reversal, typically you get 100% pullback or even a lower low. So like a reversal typically is like this, 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 and then this, this, this. And once again, this is now a downtrend, right? Because you got the double top and then the lower high. Or even better, which is a crown pattern really, is you get the lower low, lower than this low, and that definitely sets this up. Pachow. CAD 3.3 year over year. Yay! That's great. Thanks, Cash. So we have a question here. What drives the gold? Well, one of the comments I made yesterday when we were talking about the IEA report is they said global demand for energy. And then I reminded you I had an argument with a Harvard professor on this about economics. And his argument, and now I've learned it, I believe, is that if there's growth in global demand for oil, what he argued was, look, you're missing the point. It's not just oil. Of course, that's what the oil people say because they're analyzing oil. But it'll be, when you're looking at GDP, it's global growth and demand for everything. So this could be stocks. This could be real estate. This could be oil. And this could be gold, for example. Why? More watches, more TVs, more laptops, more. Okay. Cash, yeah, that's a big number. But cash, here's what I ask people to do. Don't do year over year. Do now versus 2019. And you'll get a much different number. That's all. Okay? The base effect is just, it's irrelevant. Okay? So what do you guys think? Are you buyers of gold? Well, we definitely know this area is a serious area of concern. We did this quite a while ago, so we already know that. So it'd be interesting if we, if there's, well, two things. Two things would be interesting. One, if it pulls back to support, in which I would like to at least trade the range, ideally through the range and catch a pullback. But the other thing is, it's technically interesting if it doesn't. Instead does that. I don't think so, but hey, dude, it's the right time of year for that. I think it's early. I think everything's early. I'm not, I know this is the third week and I've hyped it up, but to me, it's almost like a 5-week window starting today, this week. Okay. And when we're on the free and clear plan, like we're not worried about a Fed meeting and all this kind of stuff. Then it just starts earlier. People come back from vacation. They're like, oh, I want to sell the dollar. Oh, I want to buy the euro. And it's easy. And they start putting some trades. And over the course of 4 or 5, 6 weeks, money trickles in and, you're well on your way on a beautiful trend. But we don't have that, do we? We have that giant September meeting. So we're in week 1 of probably a 5-week window, and I think things are going to come and go. Right? I think we're going to have an increase in volatility. So I told you guys last week, if you want to make money, you should consider buying the VIX. Okay. Cool. Anyway, so gold, nice. Really depends on if you believe the dollar's going to be strong or if the dollar's going to be weak. Bitty, 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 can't you see? Okay. Just stuck here. Okay. That's it. Okay. A bull wants to see this. Pop, pop, pop. A bear is going to want to see Okay. So I'd trade not in the range, but I would trade the breakout if I had conviction for this. Okay. Okay. What does this say? Technically, this is a bearish market on the hourly time frame. So the bears rule the world. Under these circumstances, you kick it off the 21. Okay? Kick it over here, baby pop. So under the rules of engagement that I've been teaching for 20 years, this makes you a bear, and you're going to sell this role reversal. I didn't define it as a role reversal in the book. I defined it as, okay, a pullback to the 21, drop it like it's hot. And again, that's why I say at the 21, you are bearish and aggressive. You can't even think about buying. The only thing you can think about doing is selling, and you sell it off the 21, and you're aggressive, so like you don't need 9 levels of confirmation. It hits the 21, sell. Down, 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 back to the 21, sell. Okay? And you do that until it don't work none. So again, you know, these are aggressive moves in here, and you might have taken this one, and this move here changes everything, and you go to neutral. Now, you can also say, ooh, Wayne, well, the MACD would be confirming this, wouldn't it? Uh-huh. Yeah, it would, right? You would have a MACD cross below the waterline in this area, but a MACD would have topped out up here and already started coming back down towards the waterline. And this is where it actually drops below the waterline. And right now, your MACD would be aggressively falling. Aggressively falling. Okay? Maybe just in here, thought about moving up and then back down. So you can see this if we just add a MACD, right? Let's do this. Okay, look at that. Okay, do you see it? What does this tell us? Huh? What does it tell us? Now, I know some of you, you're going to define it. You're going to tell me the definition, but you're not going to tell me what it means. There we go. Charlie says hidden divergence. Okay, that doesn't tell me what it means. It tells me what it is. What does it mean? Why does this occur? Okay, Johnny says divergence. Again, that's a definition. It doesn't tell me why. Bearish reversal, not yet. I mean, you could be playing it, but it's not necessarily that. It means bulls, okay? Because you can see this is still this way. The downward, the divergence here, what it's telling me is bulls are taking profit. So Daniel says less bears. No, less bulls. There's less bulls. Profit taking. Thank you. Okay? Signals a drop of momentum, but yeah, but again, why? Why do you get a drop of momentum? Like, it doesn't explain. What's happening is there's no bears in the market yet, but bulls, the ones that are in the market, are getting out of the market. So at the very least, we're going neutral. The bulls could come back and buy it at a lower price, for example. Okay? Okay? Okay, so a bull could be doing this kind of stuff right now. Whoa, whoa, whoa. Boo, 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 doo, doo. I think there's something in there somewhere. Oh, that's nice. Do, do. I'm just going to do it that way. Do, 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 do. Okay. So let me ask you. Oh, this is nice too. Okay, great. All right, let me ask you, will a bull buy it at 41,000 or 40,000? Okay. So that's what it's telling you, that it's not necessarily bearish, but bulls are going to take a break. So if you are a bull, you want to think about this as a plan A and this is a plan B. You see? Okay. Pound gaining a little bit here. Yen and dollar giving back a little bit. CAD benefiting from the inflation number. I say, yeah, oh yeah, my love. Take a look at this. Okay. I'm going to move my stop closer. You can see it's right there. I'll move it a little closer. Okay, so I'm along the pig dog. Look at the wicks, 4-hour wicks. Look at the wicks. Okay. You see? When you're a day trader, you live inside of the wicks. You play inside of the wicks. Cash says, what do I expect from the FOMC meeting minutes? That they are seriously talking about the taper. Anyways, can you see the setup? Down. Here. You see it? Look, higher than that high at the time. So I have it trapped. You get the higher high, higher low, long and gone. Same thing I did on the Aussie. What's the target? Christmas. Okay, I don't expect it though, honestly. So I'm depending on the scenario, do I take profit or not? I don't know. But I don't have a price-based target. The first part, however, to be a little less facetious about it, is like I do got to get through that. Like I do care. But let's just say it does this. Well, then I got to get through here. And then I got to get through here. But the thing is, I'm giving it more and more room. Okay? So at some point, I just, what am I risking now? 10 pips profit? So once I'm up, so I'm long at what, 70, I don't know, 73.30. And this is going to what? It's going up at least 200 pips. Minimum. I just got to get through this. And then if I can get through this, what's it worth? Well, the target, so going back to Charles, you had a question about target. If I was trading this in normal standard operating procedure, M2 predicts M4, so I'd say 41.5. Okay, so I'm going to make 400 pips. But to be honest with you, if that happens, I might be in it longer. Maybe, right? Cool, right on. Aaron, click the button, join up. I'll see you tomorrow. Okay. Can you see it though, guys? Maybe you missed it the first time. Why did I buy it at that price? It's some weird price. Well, it's a swing trade. Okay. Okay. So on a 5-minute chart, I made a trade that I could be in for 12 weeks if it all works out. I scalped on a 5M, a trade that has legs. It has potential. Okay? But it's anything but a given. Okay? It's a Hail Mary. It's okay. As long as I can control my risk. Okay? I think I could survive this 10 pip loss. I have 10 pips of risk here, right? Take a look at Euro. Okay? What's the overarching theme right now? Well, the overarching theme is on the very first day of August, the target for bears was here. And that target says bears should exit. That's part of the thinking. Remember, I'm a bull. So a bull is thinking, well, if bears do exit, then I will see green candles. And now maybe in September, bulls will also buy. So we're calling, so you might have something like this. Okay, I don't know. But what sort of, I'm looking at a daily chart here, right? What kind of evidence, like what kind of justification do I have here? Let's go to a 4-hour chart. And maybe that's even not enough. Maybe a 1-hour chart. I'm trying to get more data. Okay, great. Okay. How do you swing trade? Well, on the first hours of the week, that's M3. And that predicts 117.02. See that? This predicts that. So I bought that. And we'll call this, for the sake of argument, we'll call it a double bottom at support. Okay. Now I have to go all the way down to an hour, to a 5-minute chart, right? And okay, and you'll see up, down. Okay, it was one of those anyways. Okay, and now it's not golden. It's not awesome. Okay, I got to be patient. Okay, I got to be patient. But a 5-minute chart, the cool thing is if I go back to the daily, if I get it right, how would we analyze this? So the first thing you do is you look and say, well, is this support? And I'd say, yeah, this whole region is supportish. Okay, what's the upside here? Sort of this area on the short run, and then more like this on the longer run. So if I was looking at it from a high time frame, I would say, well, probably this, probably that, probably this, probably that, and probably here. So I'm buying it at 117, and maybe this goes to 123, 124, 500, 600, 700 pips. Okay? But ideally, the easier one is buy it at 17, go for 120. So 250 to 300 pips. Cool. It's a start. It's good. Fine. Great. So is it worth risking 30 pips to go for 300 pips? You see? Okay. Is it right? 10 to 1, right? Risk, reward. Okay. Risking 30 to gain 300. But the 300 could be 700. Okay. So, cool. Yeah, did it actually touch? Well, it got pretty close last night. Yeah, no, because the number was 1702, not 1700. And if I recall correctly, it hit 1702, but not enough to get the spread. Okay? So, right, the bid and the ask didn't cross lower. But what I looked for is, that number, and then like this move, and then I grabbed the pullback. Right? And then it went up, and then it went, and whatever. Now I'm just waiting. Okay? So long right there. Okay? After the little touch. Cool. So now this, I don't know. Back to the 21. More likely it's going to wait. The 21 is going to come down. And this will kind of be up, down, up, down, up, down, up, down, up, down. Okay. Yeah, Johnny's in at 1710. I'm in at 1715. Yeah. Cool. Boo, 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 bum, bum, bum. Let's do yen yen. Yen, yes. Hopeful, right? Hopeful. Here's the support I did with you guys. Oh, for show. Okay. Okay. So now I got to pay attention to this. So I think it'd be cool to like see up. Well, let me do a different color. It's hard to see the blue, right? It's cool because it's traders it's Forex.Today blue. But anyways, what I would like to see would be like this, something like that. Because remember, bears are supposed to sell aggressively off the 21, and it's a good trade. What I'd like to see is evidence that the bears have taken profit at logical support. That's why we highlighted it. I'm like, this is where they would get out. So, right, that divergence, because I'm also drawing MACD in my mind, right? So sorry, if you don't see it, I'm drawing it in my mind. But anyways, the divergence that you should see with your mind would be evidence that bears have left the market and that this would be a bullish opportunity. So buying the dip, maybe Friday, maybe Monday would be great. Okay. Right now, like buying this would be aggressive in the sense of you're gambling. Buying a higher low would not be. So, okay. Okay, cool. Now, right now, it's just hope. It's just hope. This is what I wanted. Okay. And remember, in the back of my psyche, not that it's right, it's just in my psyche. I'm trying to be as open and honest as possible. I expect this to happen. So I'm really going to place a lot of evidence like, did we just bottom out on the pound yen on the 3rd week of August? So I'm going to, psychologically, I'm going to love this. If this goes up, oh my gourd, okay? Fire for effect. I'm going to believe my own nonsense, okay? But at least I'm a dog that eats the dog food. Now, if it breaches, then I'm going to back off and then say it's too early. It's too early. It's too early. And I'll wait for something like this. Okay? But this fits perfectly into my narrative. I just can't confirm it. It could just be luck, randomness, noise. You know, statistics, we talk about noise, right? And then in algorithmic programming, what happens is you program your algo and then you backtest it and you, I don't know, let's say you get a Sharpe ratio of 0.48. So they're like, that's weird. So you look at the data and then you make some changes and then backtest again and you get 0.88. And you're like, well, that's better. And then you start making changes. And what you're doing is you're getting rid of the noise and you're backfitting. You're making the changes to have a positive impact on the old data. But your best test was probably the first test to predict the future, right? So by the way, there's methods to handle this. So this is some of the stuff that we did at Oxford where what you do is you take, let's say month by month by month, right? 1, 2, 3, 4, 5. This could be years. Okay, 6, 7, 8, 9, 10. So let's say 10 years. Okay, you backtest 10 years and you get a result. Your 1.125 is your Sharpe ratio. That's actually pretty good. You're more than fairly compensated for the risk you take. That's good. You're profitable. But, you know, again, for the risk you're taking, you do have some alpha. Your alpha isn't the risk. You're outperforming. You're more than compensated for the risk you take. That's good. Okay, great. So then you have to say, well, is it luck or did I backfit this? No, do I just know the last 10 years? So I created something in my mind that would have done well in those 10 years. And then I can say, look how well this is. It doesn't predict the future, right? So the next thing you do, so you do this as one sample. And then you do the test again, but right? In this test, you use year 1, year 2, year 3, year 4, year 5, but not year 6, year 7, but not year 8, year 9, but not year 10. And and you do an out of sample test. And then you could do it again and say this year, 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 but not this year, not this year, not this year. Because very often what most people do is they have most recent history in their mind. And they're like, man, if I only had done, a momentum strategy the last 3 years, it would have been epic. So let's build something like that and test it over 10 years. So most close to their memory is the most recent performance. So you start doing these out of sample tests, the full sample, and then, pulling this out, did it do well? And then pull this out, did it still do well? And each time you want to check your Sharpe ratio. And if your Sharpe ratio changes a lot, your wonderful performing algo is full of crap. Because, you knew the game. You're betting on a game you already know the outcome of, right? But if you get Sharpe ratios that are different, then it's performing differently in different conditions and not consistently in different conditions. And therefore, you don't really have any alpha. No, Ethan. No, there's no advice for that because the only thing that I have found is I would say statistically imperfect. So I'd be careful. It's highly related to the dollar. So you might be looking at a whole bunch of different currencies and it's like, look at the seasonality of the yen. Look at the seasonality of the Swiss franc. Look at the seasonality of the New Zealand dollar. But if it's all against the USD, well, what influence does the reserve currency have over all of this? And are you just looking at different variations of dollar seasonality? And therefore, I'm like, dude, you got to create an index of all of this. And before that, you have to normalize all your data going back 20 years or whatever. You got to normalize it based on like daily percentage change. And then, all this kind of stuff. Now, the next thing I would want to do once I have the index, right? So I'm going to have to create all these indices on based on relative percent change. Then you map it year over year over year. And then I'd like to, plot like central bank meetings over top of some of this data and see if they create pivotal points, like true turning points, of the data itself. So like, if the peak for New Zealand dollar, let's just pick a number, is somewhere around November and the bottom is somewhere around March, are those turning points, because I'm doing daily, right? Daily candles. So are those turning points based on RBNZ meetings? And I think that would be fascinating, right? Like within a week or two of those meetings, you can see tops and bottoms are formed. I'm like, ooh, so those are the important meetings. And inside of that, the seasonality. Okay. Also, the thing that we're developing, I want it to consistently update itself every day. So that 3 years from now, I can pull up the data and it's new. You see what I mean? Like, let's look at seasonality now, and it's updated over the course of 3 years 1,000 times. So you're always getting the best, freshest, correctest data. Hey, you're welcome. You're welcome. Okay. Yeah, but see, Maida, that's why I didn't want to hand that out, because I think it's somewhat true, but I think the method they use is incorrect. So they're pulling data off of, an exchange, a futures exchange in the United States. And therefore, it's all tied to the dollar, and the methodology wouldn't be consistent. So I'd rather get a broader liquidity partners. So you're looking at, candlestick data from, a major broker that has multiple liquidity partners, right? LPs and LPs and LPs and LPs. So now it's not just one futures exchange. And of course, we don't want futures. We want cash and all that kind of stuff. So anyway, so once you start looking at let's look at cash foreign exchange data, euro versus dollar, euro versus Swissy, euro versus pound, euro versus yen, okay, from JP Morgan, Deutsche Bank, Barclays, all this kind of, right? From banks all around the world, providing, all these liquidity partners. So now you're getting a deeper pool. And in the cash market, not a futures exchange. Okay? But I have to pull all that out. Hey, this is what I do for fun. Anyway, so look, Beast just killing it. Okay? Beast up 100 pips. Here, let's take a look at this rotation. Okay. You have to remember, we're only talking like yesterday that we had all this lined up, right? Do you guys remember? Monthly M2. You're like, dude, that's right. You did talk about it. What? I said, look, you have to filter everything. If you're a bull, you got to be ready for this. Okay? This right here is your buy. So let me zoom in. Okay? Let me zoom in. Okay? Support. 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 Okay? Pachow. Okay? The 5A cross is here. Okay? This is a pretty decent opportunity. You might argue, you're like, but Wayne, what's the difference between this and this? Well, it's a higher high. This is the role reversal. But you're like, man, but you're splitting hairs. How do you know? Okay, great. So let's just say I don't know. What are you going to do now? Is it a higher high now? Are you going to buy the dip or not? What are you doing? What's your plan? Okay, check it out. You got to live inside the wicks. There's the top, there's the bottom, there's the 3A2. Did you buy it? Are you in the game or are you an observer? Okay. Okay. Okay, it's gone. Go. It's gone. Go. I gotta go. Give me the juice. I gotta move. Give me the juice. Yes, you are late on the trades at 8 a.m. Yes, you are. For sure. Okay. So like I have a couple of trades going. Did I take them at 8 o'clock? No. When did I take them? Not 8 a.m., but 8 p.m. So I log into New York. And what am I doing? I'm setting up Asia. This is how I teach the day trading course. Okay. So I log into New York. New York is about updating your stops and creating plans for tomorrow. Okay? But if you're going to trade New York, then you gotta trade this, right? You gotta be going. Okay? At 7 a.m. New York time, you should be looking at oil, gold, and then your market open front run. Okay? And 7 might even be too late. It might be more like 6:30, 6:45. Right? But it's the ladies and germs that log in at 8 and they're like, "What's going on? Should we throw down a trade? What should I buy? Should I buy this pound?" Dead in the water, dead man walking. Right? You ever seen The Green Mile? Dead man walking. I'm like, dude, you've already gone bankrupt, right? Bankrupt trader walking. Like, you can't just show up and jump in. And I've used this analysis before, or analogy before, but I think it's so good. Like, if you've ever played sports before, athletes know this. You take a bunch of good, decent players, throw them onto a field or some ice or a court, and you say, go. Hey, they're good. They got skills, but they don't play as a team. They don't add up to the sum of the parts. There's a saying something about like they add up to more than the sum of the parts. Actually, they add up to less. So 5 individuals with a talent level of 100 each doesn't add up to 500. It adds up to 310. You're like, how is that? They don't play together. And if you're an athlete, you know this to be true. Now you can play against a team that adds up to 300 individually. They're not as good as individuals, but they're great as a team. They practice as a team. They play as a team. They plan and execute as a team. Dude, they'll add up to 500 and they'll beat the better players. One of the Olympics, I don't know how many Olympics is ago, but the American Dream Team played, I think it was against Argentina in basketball. NBA players, superstars, obviously better players. But Argentina kicked their ass and embarrassed them. Like, it wasn't even close. They were alley-ooping over the $100 million a year players. It's because they played as a team. Right? So like this idea that you just show up and you want to get put into the game, dude, no. Okay? It's the practice, the preparation, the planning. Okay? So that's why, like, what you should be doing now, if you just logged in, ask yourself, what are you going to do tomorrow? What do you see today? Does this make you bullish? Are you now a bull on CAD? Are you now a bear on Japanese yen? Like, what does this mean to you? What does it all mean? And how would you like to invest? So like, one of the things I'm thinking of right now is the Chinese ADR stocks. This is your ability to buy Chinese stock in Chinese companies. It's an actual stock, but it's being lent out and put into a deposit. There's a bank somewhere actually holding the stock. So now you can buy the Chinese stock, but you can buy it in the United States. So think about the biggest Chinese companies. Okay? Now, I bought XPeng in May, I think it was. And I almost bought NEO, and I backed away and I bought XPeng instead. And I have my reasoning. Great. So this is up about, the last time I looked, about 50%. Okay? Cool. But I'm like, should I buy more? And now Chinese ADR stocks are now 50% down. Down 50%. Yeah, Johnny got NEO. So did Jim. I think Jim was in at 27, if I remember. I almost bought it at 23, and then I bought XPeng instead. Kind of the same thing. I picked XPeng because 40% of their employees are software developers. And my idea here is like Volkswagen is going to want to get into autonomous vehicles, self-driving vehicles, but they won't have the trillion miles that Tesla has. Well, XPeng is running autonomous vehicles in China, and they own the data. So I thought, well, Volkswagen might just say, you know what, we need autonomous vehicles too. They buy XPeng. Now they get the software, right? The AI software to make a Volkswagen self-driving, plus now they have access to China. Now you get the Chinese market. Oh, and I'm like, NEO doesn't have that. I like the charging stations, but I think that's a risk because that's not the dominant model right now. And I like that they're expanding into Europe, but I'm like, you know what? I'm going to buy XPeng and not NEO. And that was my decision. Okay, but anyways, I thought about it, right? Now, here's the thing. The Chinese ADR, right? These are multiple companies. Think about like Tencent. Think about Alibaba. Think about whatever, okay? Right now, these have dropped 50%. Should I buy it? Should I buy a lot? Should I buy a little and buy more on the way down? Okay. But the thing is, I'm not talking about right this second. And I'm not talking about, do I buy a Chinese ADR or hold it for a half a day? So I'm just challenging you to say, what kind of decisions, what kind of information do you need to make a decision about buying a stock that you'd like to hold for 10 or 20 years? Which stock will get bought out by a bigger player? Which one will expand further? Which one, right? But also we need the right price. I like it at $100. I hate it at $200. I don't want to pay $200, but at $100, interesting, right? So I want you to think about Forex somewhat like that. Like, why are you only in your trades for an hour and a half? So random, right? You're living off the noise. I'd like you to think about, are you a buyer, literally? Do you want to buy and hold CAD yen? How much belief do you have? Well, I don't know anything about this pair, Wayne. I have no belief, but my alligator crossed over on the 5-minute chart. Where was it? Where does that alligator live? Oh, here it is. Okay. My alligator. Look, I don't care about the alligator. You could use that to make money. Okay? That's fine. I'm not picking on it. But the thing is, can you put a little more thought in? Can your trades be worth a little bit more? Okay? Right? I owned Apple stock for more than 25 years. I have bottles of wine in my cellar from the 1970s. I have the first bottle of wine I ever purchased to invest in, to keep, and it was 1992. Now, I think I probably bought it in 1994 or 5, but and the bottle was never sold in the store. I had to go to the winery, I talked to the vintner, and he was great, because I remember him, he asked me how many cases would I like, and I said, well, how much are they? And he's like, oh, they're $50 a bottle. And I said, well, I'll take one. Because that was a lot of money. Right? I'll take one. So that $50 is probably $1,500 now. All right? Cool. But the thing is, I want you to think a little more than what should you do in New York. Can I have you think about the rest of this year and all of next year? Irfan is signed up for boot camp, going through all the courses. Yeah. So anyways, there's sort of just a challenge. Like, if you were going to buy a Chinese stock in a Chinese company, you might put a little more thought into it than you are with the vast majority of your Forex trades. And then you scratch your head like, why am I not getting the performance I thought I would get? How come I'm not doing as good as I thought I would do? Because you're doing a mediocre job most of the time. Okay? And don't get upset with me. I'm just saying, if you're not getting the results you want, then ask yourself, why is it? What could you change? I used to do something called Off the Charts with Wayne McDonald, and I would read about professional fund managers, and 99% of the time they were, long short equity guys, right? Or even long only equity guys. And they're managing, $1 or $2 billion, right? And I would read about them, and you could just see that, they can afford private jets and fancy cars and a big house and, some pretty person that visits or lives there. I don't know, wife, girlfriend, husband, some sort of beautiful person that hangs around, right? And you're like, so what is it that they actually do? That's why I read these articles. What is it that these guys actually do? How do you get the big house, the jet plane, the fancy car, the fancy watch, the fancy good-looking person that hangs out with you, the yacht, the fabulous vacations? What do they actually do to earn that? And so we read these and you find out like once or twice a year, they decide to maybe buy something. They have very serious meetings and they do really deep research. And maybe we buy something. Maybe. A lot of these firms, they only own 20, 30 stock. And they're like, well, maybe we should sell, we got to rebalance. So we rebalance and our momentum stocks, we're overweight. So we'll rebalance. Now we got some cash. What do we do with the cash? We'll save it up. 6, 7 months go by. Now we have too much cash. Our momentum stock again is overweighted. So we'll rebalance. And now you got all this cash. And then you're like, wow, we've been thinking for over 6 months, maybe we'll buy XPeng. So you buy XPeng and now you're done. That was what you did in 2021. A lot of conversations with your clients and lots of hard thinking on your yacht. Okay? I bring this up because you might make 9 trades a day with almost no thought process. And then you're like, dude, how come I'm not successful? I'm just throwing it out there. Someone else, like, what if I only allowed you to make 1 trade per year? And you risk 10% of your account. I'm like, now what do you care about? What are you going to buy? And you're like, well, what am I going to buy? Well, I'm going to have to how do you make that decision? Well, you got to look at how are all the different countries doing relative to each other? What does that mean for macroeconomics? What are the central banking policies of those countries? And you're like, well, and then what's the theme, the basis of your trade? And you'll say, well, look, if I'm only allowed to make 1 trade, I want to kind of make it the reflation trade, right? And you're like, well, I think in 2021 and 2022, we'll get back to normal levels of GDP. I don't think inflation will be out of control, but there will be growth. China or the United States will be strong. China will recover. Europe will get better. Therefore, and Australia and other commodity producing countries, Mexico, because they deal with the United States and produce a lot of oil. Australia, because they produce and do a lot of business with China. New Zealand, because it's a cousin of Australia, right? And probably the first one to raise interest rates. And by the way, the history of New Zealand is that they can have interest rates significantly higher than everyone else. So maybe we get some carry out of that. CAD's probably going to do all right. So now you're analyzing those, putting that together, but then you're like, wait, Wayne, I only get 1 trade per year? I'm like, yeah, 1 trade. And it's a big trade. You're like, well, now when I buy will be important. Wouldn't it be nice to know if you decided to buy the Aussie versus the US dollar, that you looked at the seasonality of Aussie dollar and found out that 80% of the time, if you bought in August, by the end of the year, it's higher. But if you buy it in November, you've given up maybe 50% of your moves. So you're like, oh my God, I want to buy it now, but not later. This might be the best time of the year. You understand? Not that it is, maybe it's not. But wouldn't you want to know that too? If you're only allowed, why would you buy at the peak? And if you buy at the peak and it comes down and you're risking 10% of your account, you can't afford that kind of loss. So now you're like, well, I don't want to buy in April. I got to wait till August. But you would. That's what I'm trying to tell you. You would. And at the end of the year, it goes up significantly. you have a 25% return in 6 months. Well, you made a good decision. Now, what if you did all that, but you make lots of little trades after, and you're paying that much attention, but you have that much conviction as well? And now you know to watch the Australia export data, the Chinese import data, the US data, just to get a gauge of how the biggest and most mature economy is doing, right? And now you got a lot going on. You got a lot going on, and you're making informed decisions. Okay? Wouldn't that feel better? Darko says, but they're doing a whole year analyzing? No, they're whining and dining clients, Darko. But really, they're not working. Okay? And they're making more money than most people here. Okay? These guys are earning $1 million a month. And you work harder than they do. Okay? So it's just a thought. Okay? Is there a way that you can combine your trading tenacity with sort of your investment analysis? And that's what I'm trying to teach. And I'm trying to get you to think that way by, changing the conversation and attacking from different points of view. But are you thinking about it yesterday when I'm talking about this is the time of year that that all the yen pairs may or may do this, and it's somewhere between this third week of August and the third week of September, and that, right? And there's a 5-week window and all this kind of stuff, and we are consolidating, and are you going to look for a breakout, and are you going to buy the dips? And all of a sudden, dude, this might be game on. And you might sleep right through it. And you'll do what worked here, and you'll do what worked here, and you'll do what worked here. But what I'm trying to say is, on this 30-minute time frame at least, look at your alligator. Bearish, 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 neutral, neutral, right? Bearish, neutral, bullish. Is this important? Well, if you also had a longer-term thesis based on hardcore research, including things like seasonality, fundamentals, central banking policy, and technical analysis, do you say, well, I don't know what this means technically, but this could be important? Now, if you see USD CAD falling, my experience tells me USD CAD will fall first, and then CAD Yen will really get going by October. That's why you want to be around third week of September, right? So USD CAD gets going in September, and then CAD Yen gets in October. Meanwhile, what the heck are you doing now? Logging into New York and like, what's up? What's up, fellas? What's going on? That kind of attitude, you're going broke is what's going on. Okay? Okay? And last week when I met with the swing trader groups, I'm like, right? I said, it was all fun and games back in, the last several weeks, but this is time to go to work. Okay? The traders in my swing trading group, they're now ready to go to work. Okay? I don't think anybody thinks that this is a coincidence. It doesn't mean it's the thing, but it ain't no coincidence. Okay? And if it does this, I'm golden, man. I'm good. I'm good with that. Okay? If it does this, I'm good with that too. But the thing is, we are not a random walk. Okay? This was planned for months in advance. Right? Cool. So I don't know if I'm right, but I know what I'm doing. Cool. So I guess we'll leave it at that. We did some yens, we did some dollars, I did gold, oil, Bitcoin. Oh, that's pretty good. I feel good. That was good. Will you please click the like button? The little thumbs up thing? Please tell YouTube this is quality content. That's all I ask. Okay, and by the way, tomorrow is a swing trading group. This is hardcore season. This is it. Fun and games are over. Talking about conviction is over. Talking about fundamentals and macro, that's all over. It's work time. So if you are going to sign up at FX Bootcamp and then join our live trading group, now's the time to do it. There's no more hand holding. There's no more slapping each other on the back. Hey, it's work time. Okay? Time to sign up. Okay? There's quite a few people actually dropped out recently because I think they got it. That's dangerous, man. That's dangerous. Okay? That's dangerous. That's very, very dangerous in my opinion. But anyways, peace on earth. May the pips be with you. May your profits be above average. Yeah. Yeah. You know, well, it's not even the keep learning idea. I think having seen so many traders over the years, what happens is it doesn't go down as they expect. And there might be over belief and over neediness. You know, like when I say the third week of August, they're dreaming of Lamborghinis and they're not, right? So anyways, what happens is it doesn't happen the way they expect. And this year with tapering, oh my gosh, that's the giant question, right? So what happens is you emotionally break down. You give up conviction. You start making mistakes. You wonder, oh, is Wayne wrong? Is the method wrong? Am I wrong? And all of a sudden, a lot of bad could happen because you got so much riding out in a particular vision that is almost certainly wrong. Versus being in a group with 30 other people that are dealing with the same thing is just so much. There's just so much more balance, right? And then to go back through, what do we believe? How do we handle conviction? How do we handle being wrong? What's the next wave? What do my 20 years of experience tell me? Like, how do we handle this? What did the Fed say? What didn't the Fed say? What was the market thinking? How do we play this out? If not now, later, how will that affect the markets, right? So it's just more like, I don't know if it's the gotta keep learning thing. It's like, it's hard to do it on your own. Right? That's all I know. That's all I know. It's very difficult to do it by yourself. That's why I surround myself with like-minded people. Right? So anyways, peace on earth. May the pips be with you. May your profits be above average. Please visit Trader's Way and open up a demo account. Tell them Wayne sent you. David says, that's why we listen to you. Well, that's why I do the Forex.Today. But I'm telling you, if you don't capitalize in these next several weeks that we have, you're going to ruin your entire year. Like over the summer, we focused on education and scalping and day trading and that kind of stuff and preparation. But dude, you can't, this is the time to stop sharpening your saw and get out in the damn forest and cut down some trees. Winter's coming. You got to get this done. Like, this is working time now. No longer fun and games, right? So like, you take this lightly, you're just gonna miss it, and you're gonna regret it. So it's like, dude, stand up, join the team, or probably regret it. What can I say? Okay. So anyways, peace on earth. May the pips be with you. May our profits be above average. Cheers.